To connect then with Girish Pai. He's joining in, Head of Research Institutional Equities IT at Nirmal Bank. Girish, thanks for joining in. Now, let's talk about the prospects for the IT sector. Do you think that, the potential loss in revenues that we would see from the top 5 IT companies may be capped at around 2%? That is what, some reports seem to indicate, around $300 million, because in the past we have seen about, 1 to 2.5% top line growth in dollar terms in the fourth quarter. So what is it that you're anticipating in terms of the fallout?
So for 4Q specifically, we would think that there is going to be anywhere between 50 basis points to 100 basis point impact because of the lockdowns that have happened both in India as well as in US and Europe. So we are expecting a weak quarter. 4Q has typically been the second weakest quarter in a fiscal. Typically 3Q tends to be the weakest quarter. So from that standpoint, we're not expecting any great numbers to come through from the quarter per se. But I think the market is going to be focusing not so much on the quarter's numbers. I think the focus is going to be more on in terms of what is going to be the FY21 revenue growth and margin picture, which is where we think that the consensus numbers still are fairly optimistic. We are factoring in something like 3 to 4% US dollar revenue decline for the industry because we think that this economic situation we have in US and Europe is going to be far worse than what one has seen in 2008-2009 global financial crisis. We could see US growth, real GDP growth at 3% or even below that. I'm talking about negative 3% or even below that. So we think that the market's not pricing that in. If you look back in history in that 2008-2009 time frame, we've seen P multiples of some of the stocks go down to as low as mid-single digits. And Infosys, which was the bellwether stock at that point in time, was in high single digits. So we're not there as yet. So I would think that we're going to see multiple, such cases of where people are going to get bearish and bullish. Alternately, I would agree with the previous guest's view that we'll probably see a longish period of earnings correction and market volatility. Last 2008-2009 was a 15-month long kind of bear market. I would probably think it's going to be at least that much. And within that 15-18-month kind of a bear market, we'll probably see multiple, rallies, short-term rallies, sharp short-term rallies. So that's what I probably think will come through for even our market. And within that, I think IT will probably underperform. Right now, it's not visible. The customers of Indian IT firms don't have visibility on how things are going to pan out for them. So one of the things I worry about is we don't even know what the first order impact is, let alone the second order impact. So I think that's going to be visible in a few months' time, and which is when I think the consensus numbers on revenue growth are going to come off. And we think that there's going to be more pressure on the IT services firms. So we're kind of cautious on the sector. We've been cautious on the sector for a fair bit of time, but we continue to be remaining so.
Okay, fair enough. Girish, let's get in your take then on HUL, if you will. At nearly $71 billion, the market cap is more than half of its parent Unilever's market value. How are you reading into the kind of move that we've seen for HUL since the beginning of the year? The stock has gained nearly 33%. It's the second best performing consumer staple stock after one of China's companies. With respect to the overall valuations that the company commands, it's one of the most richly valued in its category. What's the story when it comes to HUL?
So when you look at the market, I think the market participants, institutional investors are rewarding companies where there's visibility on revenue and profits. I think within the market, I would probably think consumer staple companies and pharma companies are probably those specific areas within the market where I think there's a slight bit of certainty on the earnings picture. If you look at the other parts of the market, there is huge amount of uncertainty there, be it banks, be it IT that I talked about. There's oil and gas, there's a lot of uncertainty. So I would think that there's money that's kind of gravitating towards stocks like HUL and some of the other consumer names which are probably moving up in price. So I would say that it is that is kind of driving up the stock. Yes, multiples are looking fairly rich. I think it's trading at somewhere close to 50-52 times FY22 earnings. This is including the Glaxo consumer numbers. So I would say it is a in the near term. I would say next 6 to 12 months, it will still continue to be a favorite of ours. I think it's a area. Consumer staples is an area where we think you can actually conserve capital, where you can protect capital. But looking beyond that, I would be a little bit more worried on the consumer space, consumer staple space specifically, because the valuations are fairly rich. So I would say 6 to 12 months, I would still be overweight. Beyond that, I would worry about the kind of valuations we are sitting on right now. It's right now our overweight is more from a capital protection perspective.
With us, Girish, lots more to